Welcome to RJ Explain Money. Please note, this content is for education purpose only. We provide news and facts and not financial advice. Always do your own research and consult a professional before making any investment decision. Picture this, as a global market held their breath ahead of the Federal Reserve decision, Indian equities wrote a different story. Like a seasoned trader spotting an opportunity amid the uncertainty, Dalal Street chose the optimism over the cautious, and it is powered by the renewed hopes of an Indian-US trade breakthrough. Key highlights from today's session are: Sensex gained by 0.38%, Nifty 50 gained by 0.36%, Nifty 50 sustained above the important psychological mark of 25,300. Market breadth remained positive with 2,311 stocks advancing versus 1,655 stocks declining. The Indian rupee gained 25 paisa to close at 87.80 per US dollar, and this marked as a 0.28% strengthening amid an expectation of the Fed rate cut. The gold retreated from the record high. The gold price declined after touching a record level, and now it is down by 0.85%. Yesterday it gained by 0.88%, but today it is down by 0.85%. Next, we will look into the positive news and its impact. India-US trade deal momentum drives the market rally. The most significant catalyst behind the today market surge was the renewed optimism surrounding the India-US trade negotiation. After a day-long discussion in New Delhi, both nations agreed to intensify their effort to achieve an earlier conclusion of a mutually beneficial trade agreement. And the main details around this India-US trade deal is US Trade Representative Brendan Lynch led a delegation in a constructive talk with the Indian official, marking a potential shift from the earlier tension over the tariff. The discussions were described as a positive and forward-looking, covering various aspects of the bilateral trade. This breakthrough could also lead to a withdrawal of the punitive 50% tariff currently imposed on the Indian goods, which doubled from the 25% due to the India's continued purchase of the Russian oil. This development signals a potential end to the trade tension that weighed on the market sentiment. And the stock which had performed well due to this news is IT sector. IT sector emerged as a top beneficiary, gaining 0.8% as these companies derive a substantial revenue from the US market. And in this, TCS and Infosys were among the notable gainers. Next, on the positive news, we have the PSU banking sector leads a sectoral gain, whereas the PSU bank emerged as a day standard performer, surging by over 2.6%, driven by the fundamental and the policy support expectation. State Bank of India led the charge with a remarkable 3.05% gain following the divestment of approximately 13.18% stake in the S Bank to Japan's Sumitomo Mitsui Bank Corporation. And for this, SBI received an enormous 8,888.97 crores from this transaction. Next, on the positive news, we have the defense stock rally. And defense stock witnessed a significant movement with the defense assets gaining around 2%. And in this, the Bharat Electronic Limited surged by 2.2% after the fresh order worth 712 crores this month, including IT, cybersecurity, communication system and the blockchain-based solution. Next, on this defense rally, not just BIL, there is other stock which also gained, and in the small cap, it is Gordon Ridge Shipbuilder emerged as a top gainer in a small cap segment with a 6.35% jump, while the other different names like Zen Technologies also gained by 5%. Next, on the positive news, we have the cement sector rebound on the margin growth expectation, whereas cement rallied across the board with the gain ranging from 1 to 3.3%. And the main reason is CLSA's recent report suggests the sector is likely to benefit from the margin growth driven by the pricing discipline, cost saving measure and the recent tax reduction. And the stock which had rebounded due to this is Ultratech Cement, Shree Cement, Ramco Cement, Ambuja Cement and the Dalmia Bharat all participated in the rally. Next, on the positive news, we have the real estate development gain traction, whereas in this, on the real estate, Mahindra Lifespace surged by 4.4% following the announcement of the redevelopment initiative for the two housing societies in Mumbai, with the estimated potential development value of approximately 1,700 crores. And this reflects the growth momentum in the urban redevelopment project and the real estate sector recovery. Next, we will go into the negative news. And on the negative news, we have the financial service. The financial service are facing the profit booking. Despite the overall market rally, select financial service and insurance stock came under a pressure as the investor booked profit after the recent gain. And in this, HDFC Life Insurance led the loser with a 1.08% decline, while the SBI Life Insurance dropped by 0.87%. The selling pressure came after the stock had witnessed a significant run in the previous session. Next, on this, the life insurance sector faced a headwind due to a concern over a regulatory change and the competitive pressure affecting their margin profile. The broader Nifty Financial Service Index, despite closing higher, saw a selective profit taking in the insurance name. Next, on the negative news, we have the consumer durable and the FMCG, both are under pressure. The Titan company, India's largest jewelry retail, declined by 0.91% amid a concern over a discretionary spending and the seasonal demand pattern. The stock faced a selling pressure despite the overall positive market sentiment. The consumer durable and the FMCG sector witnessed a mixed performance, with the Nifty FMCG sending in a loss for the session, whereas ITC and other FMCG names also faced a selling pressure, reflecting a concern over the rural demand and the input cost inflation. Next, on the negative news, we have the non-banking financial company, that means NBFC, which also sees a correction. Bajaj Finserv declined by 0.98% as the investor turned cautious on the high-growth NBFC amid a rising funding cost and the regulatory scrutiny. And the NBFC space faced a pressure due to the concern over the asset quality and the impact of rising interest rates on their lending portfolios. Next, on the negative news, we have the metal sector. Last week we saw the metal sector was on the rally, but this week they are facing the selling pressure, especially on the Hindalco industry, and it is dropped by 0.85%, while the Tata Steel also declined during the session. The metal sector faced a headwind from the global commodity price volatility and the demand concern. The sector performance was influenced by the mixed signal from the China's economy and the global manufacturing activity, affecting the aluminium and steel demand outlook. Next, on the negative news, we will see the telecom infrastructure, which is under pressure. Vodafone Idea declined by 1.89% in the mid-cap segment, continuing its underperformance amid ongoing financial challenges and the competitive pressure. The telecom sector faced a headwind from the intense competition, regulatory uncertainty, and the capital expenditure required for the 5G rollout. Next, on the macroeconomy, that means on the global economy, first we will look into the US market. The US market retreated from the record high ahead of the Fed decision. Dow declined by 0.27%. The index faces a selling pressure as the investor turned cautious ahead of the Federal Reserve rate decision, with the United Health Group and the other heavyweight stock dragging the performance. And the S&P 500 edged down by 0.13%. The benchmark index faced a mixed sector performance, with the utility and the real estate leading the decline. And the reason for it is, despite strong retail sales data showing a larger than expected 0.6% increase in August, market focused on the Fed decision uncertainty. Next, on the Nasdaq, it dropped by 0.07%. The technological stock faced a mixed performance, with the Nvidia declining on a weak China demand concern. The tech-heavy index was pressured by the report of weak demand in the China for the Nvidia latest AI chip, highlighting an ongoing geopolitical concern affecting the technology sector. Next, we will look into the Asia market. Asia market showed a mixed performance, whereas Nike 225 declined by 0.25%, marking the fifth straight monthly decline. The car export lead the fall, weighing down by the tariff concern between US and Japan. Next, the persistent weakness in the Japan's export sector, particularly automobile, due to the ongoing trade tension and the tariff impact. Next, on the Asian market, we have the Hang Seng, and it bucked the regional trend with a strong gain of 1.8%. Mainly the technological companies surged, with the Hang Seng Tech Index jumping by 4.2%. Next, on the European market was edged higher today, whereas FTSE gained by 0.22%, as the UK market showed a resilience amid the global uncertainty, and DAX rose by 0.2% as the German market rebounded from the previous session decline. The SAP led the gain, rising more than 3%, while the Rheinmetall gained by 1.6% after announcing a military division acquisition. It means not only in India, defense sector is performing well across globe. This is mainly due to the geopolitical situation currently happening across the world. Next, we will look into the key catalyst ahead. The first key catalyst is the US Federal Reserve rate decision, which is about to happen tonight. The Fed is widely expected to announce its first interest rate cut of 2025, and with the probability of 96.2% of 25 basis point reduction, and now the Fed rate will come in the range of 4 to 4.25%. Next on the key catalyst, we have the RBI Monetary Policy Committee meeting, which is to be held on October 1st, where the central bank will review its current 5.50% repo rate, with the inflation declining to 2.1% in August, near the lower bound of RBI 2 to 6% tolerance band. There are expectations of potential policy accommodation. The RBI already cut rate by 100 basis points since February 2025, including a significant 50 basis point cut in the June. Any dovish signal from the RBI could further boost the banking sector and other interest-sensitive sector. Next key catalyst, which is happening currently, is India-US trade agreement development. Following a yesterday positive decision, both sides have agreed to move to the virtual platform with the expectation to finalize the dates for the 6th round of talk. Why this matter is, the breakthrough could result in the withdrawal of 50% tariff on the Indian goods, significantly benefiting the export-oriented sector. The US had initially imposed 25% reciprocal tariff in August, which doubled due to the secondary sanction over the India's Russian oil purchase. Next, I like to close this summary with the 3 key takeaway and the 3 key risks that should be on your checklist. The key takeaway for today are trade diplomacy pays a dividend. India-US trade talk breakthrough demonstrates the power of diplomatic engagement in unlocking the market value, with the potential tariff relief worth billions to the Indian exporters. Next on the takeaway, we have the sectoral rotation accelerates, where from PSU bank to the defense and now to the IT. Today gainer reflect a strategic capital allocation towards a policy supported and fundamentally strong sectors. The third takeaway for today is market maturity is evident. Despite global uncertainty, Indian market showed a remarkable composure with the volatile index at an all-time low, indicating a evolved risk assessment and the confident long-term position. Next, the key risks to be noted for today are Fed decision volatility. Tonight, the Fed announcement could trigger a short-term volatility regardless of 25 BPS cut expectation, requiring a careful position management. The second key risk is the global growth concern. The persistent weakness in the Japanese export and the mid-sized European data highlights the ongoing global demand challenge that could affect the Indian export sector. The third key risk is the profit-taking pressure. After significant gain, the selective profit-taking in expensive pockets like consumer durables and the insurance stock suggests the need for a tactical adjustment. Thank you for watching the video. If you found this briefing helpful, smash the like button and share it with a fellow investor. Don't forget to subscribe. I'm always open to the feedback. Please provide your valuable feedback in the comments. Thank you.